Hello and welcome back, everyone. I know it's been a minute, and I promised you that I'll be doing these Bitcoin videos pretty soon, and it took me a little while, mainly because I was just trying to figure out what kind of a setup I'll have, whether it'll be just videos or like a podcast type of a thing. But I just decided to just start recording and start with the basics, and then we'll go from there, and then we'll change as needed and as the questions come in. Now, some of you know that I was an options trader for a long time, and this very channel used to be dedicated to options trading. And recently I stopped with that because basically I just figured that options trading is becoming distraction to me. I'm dedicating my time to Bitcoin. It's been 3+ years since I started down the Bitcoin rabbit hole, and over time, as my conviction grew and my curiosity grew as well, I just started spending more and more time on Bitcoin and less on trading options. So I figured that there's no point in continuing because I'm of a strong belief that majority of traders, myself included, over the next 10-15 years will greatly underperform simply dollar cost averaging into Bitcoin. And with that in mind, I just don't see a point for me to continue trading options when I can allocate my resources and my portfolio into Bitcoin, which I did over time. I first kept a little bit of it in a trading account, but since I stopped trading options, I also allocated that to Bitcoin and the Bitcoin proxies like a MicroStrategy. Majority is in cold storage Bitcoin, but I also do a little bit of MicroStrategy and similar things to keep me busy and to maybe take advantage of some additional beta that I can get. So I'm assuming most of my initial audience will be options traders that followed me before, but everybody is welcome, and hopefully we'll grow this channel with more Bitcoin enthusiasts. But let me start by saying that government and institutions would prefer that we don't think about alternatives to the current fiat system. It serves them well. They get to print money out of thin air continuously and fund their preferred programs and run deficits and such, while every single dollar that you and me work for gets debased continuously over time, and our purchasing power is being destroyed. And it's not easy to escape. If you have a lot of assets already, then you probably are benefiting from this process. A lot of rich people have a lot of assets, and they don't mind the dollar debasement because that causes inflation, and particularly in scarce desirable assets, so they are well off. But the majority of people are not there. So an easy, simple way to get started building your asset is actually building it in a best possible asset, which is Bitcoin. And you can allocate small amounts of money, $10 here and there, $100 a week or a month. It doesn't really matter. You can denominate in any in a small amounts as you like. But let's talk about this debasement. This debasement happens continuously, and it's not what you would think the CPI number that they tell you. It's like 2.5% or whatever. This is just a highly manipulated number to create an illusion of inflation being in the neighborhood of 2%, which is nowhere near the truth. And you probably notice that if you buy anything of value, that the prices are going higher by a lot more than 2-3% per year. So over the last 60 years or so, that debasement it's been going on at around 7% a year on average, even though it's been accelerating recently, especially since the COVID, when the government pumped in a ton of money, which created inflation and huge debasement over the last couple of years. And it's very likely that this is going to continue as the debt is growing, and basically there's no way out. Money is broken. They have to print, and they will have to print more, and the money and your purchasing power will get destroyed even faster. And the only way to hide, the only place to hide, is in hard assets. That's the only thing that can save you from this debasement, because hard assets, scarce desirable assets, go up in value as the dollar gets debased. And Bitcoin, being a quick reactor to that process of money debasement, it sniffs it out. Gold is also fast to react, but gold has its own set of issues. There is still a debasement that happens at around 1.5 to 2% per year. And if the price goes high enough on gold, you can always find more gold. And this is not the case with Bitcoin, because regardless of the price, there will always be only 21 million Bitcoin, and there's nothing that anybody can do about that, governments included. So this is very important, because even at the 2% or 1.5%, your money over a long period of time is losing a lot of purchasing power, your gold that is. So in addition to that, gold has other issues, namely because it's physical, it's not digital as a physical property. It has issues. It's hard to secure, hard to move around. It's not easy. If you have large quantities, you basically have to have army escorted from one place to another. It's not very practical. Furthermore, you can't really easily divide it into smaller units, so it's not practical for any type of smaller trade. It's good for trading, between countries, covering the trade differences, but it's not easy, not practical for smaller things. And in addition to that, it's also hard to verify. You could have a fake gold or partial gold, and so it's not something that you can easily verify on the fly to be 100% sure. And it tends to centralize. The gold will always centralize because of its physical properties, and centralization leads to all kinds of problems, including manipulation with price, issuing the IOU paper over it, which may or may not be actually backed by real gold. So you just don't know. It's hard to audit the gold. We don't really know who has what reserves. So in addition, it's also it makes it easier to confiscate if for whatever reason government wants to do it. They did it back in 1933 with the Executive Order 6201, when Roosevelt asked people to bring back the gold, and under threat of fine and imprisonment and such. So that's something that can always happen, and we have to keep that in mind. All of these solutions are 20th century solution, and Bitcoin is a 21st century solution. Bitcoin is decentralized, censorship-resistant, trustless protocol with no counterparty risk. It is the most secure computer network in the world, and actually gets stronger when attacked, and that makes it anti-fragile. So we quickly ran down some solutions to the problem, and there is going to be a lot more that we'll talk about. In this episode, I just wanted to kind of pique your interest. I want to make sure that you don't buy based on hype. A lot of people buy Bitcoin based on hype at the cycle peak, when everybody's talking about Bitcoin and it's all over the news and the price is skyrocketing, going up every day. The problem with that is, when you buy like that without doing the hard work to educate yourself, to build a conviction, you will buy on hype, and then you will sell based on fear, and probably at the worst possible time, when the Bitcoin is bottoming again. Because, as it is right now, Bitcoin does work in some cycles, and generally speaking, they are lasting around 4 years now. We have a little bit of peak and hype in one of the years. This is likely to happen next year. If the history repeats itself, we don't know that will happen exactly, because we have institutional players in the game now, so it might be muted somewhat, but it might not. And it's important to not overextend yourself and buy more than your conviction and understanding can carry, because you have to be able to withstand the volatility, which is definitely coming. Bitcoin is volatile, and but we have to make sure that we don't mix or conflate the risk for volatility. Risk is something else. Volatility is something else. We'll talk more about that specifically. Maybe I'll do an episode on the difference. But just know that it's important to buy a little bit. That will make you work a little bit harder on educating yourself on the Bitcoin, on Austrian economics, on money in general, and everything related. And then once you have that, then you can start buying a little bit more based on your conviction, because the important thing is that you don't sell. Bitcoin is not something you sell. This is not something you trade. Leave that for your stocks and options. Bitcoin should be bought and kept for a long-term store of value that until it's fully adopted will likely grow much faster than generally stocks and real estate. Once we hit the full adoption, that will slow down. But for right now, we are basically saving in Bitcoin, but we are gaining the appreciation of a growth asset as well. So don't buy based on hype, buy based on your conviction. All right, that's it for today. Just feel free to leave some comments down there if you want some specific topics for future episodes. Make sure also you like and subscribe, and I will see you in the next episode of Understanding Bitcoin. Thank you. Thanks for watching.